Now, our first conversation today. Economic experts have remained optimistic about Nigeria's economic outlook for 2025, projecting growth rates averaging 4%, even as they expect inflation to decrease potentially below 30%. Though challenges persist, including high public debt and reliance on crude oil exports, the experts say the government's fiscal discipline and policy reforms are crucial for achieving stabilization and unlocking economic potentials. Despite these challenges, experts see opportunities for investment and growth, particularly in the energy sector. The CEO of Financial Derivatives Company Limited, Mr. Bismarck Rewani, highlighted Nigeria's robust economic growth outlook, suggesting that the likelihood of a recession is currently very low. I think that's good news. He also addressed claims about overstated petrol consumption, asserting that Nigeria does not consume 70 to 80 million liters of PMS on daily basis. Well, that's something that has also been a topic of discussion in recent times. Let's start our conversation this week. And joining me live in the studio is the Chief Investment Officer of Afri Invest West Africa, Mr. Robert Omotunde. He's live in the studio. Let me join him for the conversation. Mr. Omotunde, thank you so much for coming into the studio. It's good to have you here.
Thank you for having me. It's always a pleasure.
Thank you so much. Well, I think we should start our conversation with these reforms. You know, we've stayed on it for some time, for a bit of time. Yeah. But we've seen some figures, particularly the last GDP figures we saw, 3.86%, 84%, a bit of rebound. And everybody's talking about that positive, saying if we can stay on this pedestal, maybe we're already getting out of it. There was also a rebased inflation figures that showed a bit of decline, but that doesn't mean that prices have started to drop. I agree with you. I know economists would argue that. Yeah. But looking at all of this, what do you make of it? Where are we? What's the next step?
I think that reforms are inevitable where we have found ourselves, given the conundrum of issues that the government has had to deal with. We have argued over and over that there were times we needed to have taken tough decisions that we have not taken. Let's give it to the current government for having the courage to take these bold decisions. And I don't think anybody will tell you that reforms that the current government is pursuing, are not needed. They are absolutely needed if we must get out of the economic quagmire that we found ourselves. Now, that said, if you look at the different reforms that the government has put out there, right, starting last year with the reforms in the petroleum downstream sector, taking out subsidy on PMS, that's petroleum motor spirits, and looking at the reforms that is going on in the electricity sector, even though it's not fully done yet, but at least we are already seeing the good steps that are being taken in that direction. And then coming to the reforms in the foreign exchange market, which most economic watchers have criticized, even though I align with government on that in terms of the flexibility of the foreign exchange market. True. That's what has brought us into to the current scenario where we are now. In that reforms, if I could touch a bit on that, you've seen the worst of currency depreciation happening in the course of that major reform.
1,800.
Up to 1,800. And then you've seen it come back as low as 1,000, before it crept up again to as high as 1,007. And in the last 2 weeks, we saw as low as, just before last week, I would say, we saw as low as 1,500 before we started to see it creep up again. Now, that's to tell you that in an environment where reforms are the order of the day, and if we are willing to do things by the books, if we are willing to do things, by the way of the market, you will always see that volatility. It's normal for currency volatility to happen in every economy. But the latest reform that is on the lips of most people is a tax reform. Yeah. Which again is another bold step that the current government has taken to even say, let's overhaul, the current tax system, because what we have been using is archaic, probably downloaded to us by the colonial masters, and then we've done nothing because nobody has really looked at the alternative to oil revenue, which I think is going to work in favor of Nigeria overall. The fact that we are even talking about the alternative, revenue sources for the country. And if you look at the current budget of government, you will see that non-oil revenue is going to account for something significantly more than what we expect from oil. Because, I mean, if we are not going to talk about the challenges the government will have to deal with in terms of the, should I say, the feasibility of, oil revenue projection from the perspective of both price and even output. If you look at the current output level at about 1.4 million barrels, plus condensate, maybe about 1.7 million barrels. Yeah. And then you see a budget of 2 million barrels, and some fractions per day. Yeah. Now, there is every reason to think that government may not be able to achieve its output projection. Now, culminate that with what we're having currently in terms of the ceasefire between Russia and Ukraine, which again is going to throw another dynamics into global oil prices. Yeah. So it's likely that we are going to see a bit of moderation in global oil prices. We've used a 75 benchmark. Are we going to be playing with a $60 to $65 benchmark? Which means that, by our own estimate, all of these issues, both from the revenue side and the price side, in terms of the optimism on prices, could take oil revenue down by 30% below the budget assumption, right? So what then does that mean for the government? Already we have a deficit in the budget, which we think that most likely the government is going to exceed.
So we're already moving to talk about budget, sorry to interject you, and revenue issues, which is very key at this time.
Critical.
So is it that we ramp up production for us to be able to get more money, even if the prices drop, or what do we do?
You see, the way the oil market is structured right now, I'm not quite sure that there is much to be done in terms of ramping up production if there are no new investments. Beyond other issues that the market is dealing with, theft, sabotage, and what have you, the major thing has been that the country has not been able to move past that 2 million barrels per day. For as far back as you can remember, since I joined the industry, the financial market, almost 20 years now, I have not seen a time that Nigeria has been talking above that 2 million barrels per day. And by far, since the 70s, it means that there are some investments that need to happen in that sector, which is what the government is now trying to do with all of the reforms that is going on. Tax reform is a significant one for the oil market in a situation where the tax rates in the oil market is as significant as 85%. Some reforms can help to attract more investors into that space. So definitely government revenue projections will be challenged in 2025. Now, I'm not sure that the reforms we are putting up now will be able to survey the 2025 budget, because it's going to take some time. You're going to pass, even though you understand that the legislature is largely in favor of the executive, but it will still take some time. They will take their time before passage of the bill, and when the bill is passed, then move to the implementation phase. Some you will get right, some you will learn from the rope, and then maybe by 2026 we can now begin to see the full effect of that tax reform in the 2026 budget. But then in 2025, what happens? We think that revenue is going to be challenged, and the government will have no other alternative than to turn to borrowing. So borrowing is the way to do it, from the domestic market, from the foreign market. Last year, towards the end of last year, we tapped, the Eurobonds market, with about $2.5 billion of issuance. Now we expect that may also happen, in 2025. Beyond the fact that the Minister for Finance is also talking about looking for other alternative sources of borrowing and de-emphasizing the domestic market, looking at bilateral borrowings and the likes. So definitely government would not be able to avoid that. The other option would have been ways and means, which the government has clearly stated that it's a no-go area because of the way to manage inflation. So definitely speaking, you will have to, take some more tough decisions as we go along the line. Government is looking at dimensioning all of the issues we have and throwing in all of those reforms almost at the same time, right? It's expected. It's like a patient that's at a stage a terminal stage. Let me put it that way. You know, you're at a terminal stage. We're at a phase of resuscitation now. You know, more like we are gasping for breath, and then we need life, right? And to do that, the doctor in this case is the economic policy makers, you know, having to throw in all of the policies that we need, you know, some that are not as, you know, should I say, as not as accommodating to the body, you know, in this sense, if we see the economy as a whole, as a human being in this sense. So tough decisions have to be made, which the government is trying to do at the moment, right? The other side of it, which is beyond the purview of our conversation, would then be, you know, what other signals will the government send to show to the people that, see, we are leading the pack in terms of
talking about fiscal discipline.
Yes,
here
fiscal
now,
discipline, you know, reducing corruption as much as possible, so that, you know, as we are taking these tough decisions, Nigerians too can have the confidence that the government has got their best interests at heart. But it must be said that these reforms are critical and they are necessary for the country to move forward.
We've touched on the assumptions already, and critically, everyone will talk about how we'll make this happen for 2025. But moving on, and these tax reforms, which you also touched on, can we highlight some of the real positives of this if at the end of the day properly implemented? What are the positives? We still talk about tax to GDP ratio that is around 10% or around 11%. That is not so impressive. And if you look at other countries around us, Kenya, South Africa, they're doing pretty better than that. So do you think this would help expand this net, or what really? Because Nigerians are scared when they hear tax.
Absolutely. I think that is going to help in some way. I mean, look at the breakdown of the tax reform, right? Currently, 30% and 2% education tax, right? And then the government is proposing that we will reduce that to as low as 27.5% for 2025. And by 2026, that will go as low as 25%. You know, I would say that's even a bold policy to push forward, because we are talking about revenue fundamentals that are still challenged. And then the government is now thinking, I could even, you know, push some form of reduction, you know, because again, if you are going to enable businesses, right, and if you look at that tax policy and some of the incentives that are there for small businesses, you know, some businesses that are exempted from paying taxes, you know, given their revenue profile, you know, and, you know, a lot of other incentives, so to speak, that you can really pick from the face of the reforms. You will see that it looks like the reforms are well intended, you know, and they are meant to generate, you know, should I say, incentive for those who are not paying taxes at the moment, you know, to begin to come into the net. You know, the issue we've always argued about, you know, taxes in Nigeria is that oftentimes government are come in and then they think about what can I do more to get more tax revenue, and the first thing that comes to mind is increase the tax rates, right? Meanwhile, you have a tax base that you are not fully tapping into because of the informal nature of most businesses. So one of the things, you know, I believe that this tax reform will help the government to do is to get more people into the tax net. And I think that's the sense in reducing the rate, so that if you have more people on the base, you still generate more revenue at the end of the day. Now, I am an advocate of Nigerians paying taxes, because I think over the years, we've not been seen as a tax-paying country. So because of that, Nigerians are a bit not, maybe should I say, even though we care, we talk about the issues, but Nigerians don't, you know, hold the government to account, maybe because it's oil revenue, you know, it's coming from a particular place, you know. But when you have to fund the operations of government by the taxes you are paying, maybe you can get more interested. You know, where your treasure is, your heart will be, right? So if your treasure is in Nigeria, by paying those taxes, maybe we can get the government to account more, right? So that's from a responsibility point of view for the citizenry. But more importantly is the fact that these tax reforms, I believe, and if you look at the professionals that the government, you know, put together, you know, to come up with this policy, you know, it's a bold decision. We must admit, you know, it just looks as though so many things are hitting Nigerians at the same time, you know, and like I said, you're at a critical stage, a terminal stage. If nothing is done, the patient dies, right? So when you're at a terminal stage, you can have many professionals working on you at the same time, depending on the kind of illness. So I think that's the case that Nigeria is having now. So that's why you're seeing all of the reforms hitting us left, right, and center. You know, but we need to just, you know, take some pains, be patient through it, and see what will come out of it at the end of the day. Now, on some of the, you know, should I say statistical, I don't want to call it statistical reforms that is happening on the side of rebasing of GDP, you know, rebasing of inflation figure and all of those. I mean, we've argued it before that, you know, that is the right thing to do, right? Perhaps we've delayed too long. You know, I think where Nigerians are a bit, you know, skeptical with some of the figures is some of the, you know, we didn't have enough opportunity to query the result of the inflation rebased, as in the new inflation figure, particularly on a month-to-month basis, because in the last rebased figure, we saw that inflation rose by about 10% on a month-to-month, right? We would have needed more explanation from the...
declined.
You know, no. So I mean,
on a month-to-month basis,
you know, because based on the rebased figure, it was December. December figure was like 100. So then you saw a 110 in January, which was like a 10% month-to-month. That was why inflation came to about 24%. You know, because if we follow the pattern of the rebasing, you know, most people thought that inflation should have been at around 15-16%. Because, you know, for you to have that sort of growth in inflation on a month-to-month basis, it's quite not, you know, we're not sure what happened there, and we didn't have enough opportunity to query it. You know, perhaps by the time we see, you know, the inflation figure, which we were expecting today.
It should come up today.
But I mean, as at the time of this studio, we haven't seen it. Yes, so, but by the time we see that, maybe we can get more explanation and for us to be able to know exactly what happened. But what must be said is that we still need to manage our issues in order for us to see inflation decelerate more increasingly. The good thing that the rebasing has done for us is that it will at least give the MPC, that is the Monetary Policy Committee, the comfort to hold the rate. You know, we've argued when inflation was rising, the continuous increase in rate was further fueling, you know, inflationary pressure. And that was because the MPC was only looking at data and saying, if inflation is rising, I'll keep increasing. Not knowing that those increases were actually impacting on inflation as well. So, but now, I mean, we like the fact that the rebased inflation figure will give them some room to at least take pause the policy for a moment, so that at least we can see the effect of, you know, some previous increases and how it is impacting on the overall general price level. But it must be said that there are many pressure points for inflation as we go along. Because, I mean, the good thing is that also pump price of petrol has moderated a bit, you know, because of some of the activities of Dangote. What we now need to see is how much of exchange rate stability we can continue to enjoy in the light of, you know, all of the things happening within the petroleum sector.
Let me follow it up from that exchange rate which you mentioned. You saw the report last week from Chatham House saying that our currency is now competitive, considering the fact that the government allowed devaluation and all of that. So I really like you to react to that, saying that this would attract the needed investment. Some say we should, the guys with the hot money, the FPI guys might want to come in. But for me, I'm more interested in FDIs. But what do you make of that submission from them? And is our currency at the moment with this figure, is it appropriately priced?
I think that the journey, I call it a journey, to the appropriateness of our exchange rate is going to take some time.
Okay.
Yeah, now take some time because there are many issues that got us to where we were before. Before we started seeing some improvements. You know, so it's not so clear if at the moment you can really say that, yes, we are now appropriately priced, you know, because when you juxtapose Nigeria's exchange rate, just looking at it on a relative basis, currently Nigeria's exchange rate reading at around 570, 580, you know, as we speak. And you look at some other neighboring African countries that are not as strong as Nigeria, you know, with the exception of Ghana, knowing that they did a redecimalization. But pick other countries, you know, Cameroon, for example. You know, when you look at exchange rate in Cameroon, it's about half of what Nigeria's exchange rate is, right? And you would think that Nigeria has some solid fundamentals, you know, better than, you know, that country. So when you look at on a relative basis, it looks like Nigeria's exchange rate is mispriced, you know, but the degree to which it is mispriced is a function of, you know, what are the needs for FX within the economy, right? How much of our import bills are we able to cover? What is the strength of our reserves? And how much more are we able to attract into the economy? And then you spoke about FDI and FPI.
Yeah.
The thing is, for short-term stability of the currency, FPI is easy to get because, you know, those ones are not, FDI takes a lot of time. You know, you have to look at, you know, identify the opportunity within the domestic economy, first of all. But for the foreign portfolio investments, they can just come straight for your treasury bills, for your Omo bills, for your bonds yields and the likes. You know, you know that we have not been able to get ourselves back to the JP Morgan Emerging Market Bond Index, which we got kicked out from in 2015. Now 10 years, right? So it's going to take a lot of stable reforms that, you know, foreign portfolio investors can see that the country is moving towards a market path before they can then have a bit of confidence to begin to come as we expect. Yes, we are going to see some FPI coming, but we may not see to the full scale that Nigeria can attract because, you know, reforms that we are going through, we need time to show to the rest of the world that we are serious and that these reforms will stand the test of time. It's when they see, you know, they have confidence from that perspective that then they can beat their chest and then bring in the funds. First for foreign portfolio investment and then for foreign direct investment at large.
We never have enough time to talk anytime on this show, but I must thank you so much for your time as always. I've been speaking to the Chief Investment Officer with AfriInvest West Africa, starting the week with us on Business Nigeria. Interesting conversation, as always, is Mr. Robert Omotunde. Thank you so much and have a great week.
Thank you.
All right, then.